Hey everyone, this is Ryan B with Practical Forex Trading. This is your weekly analysis for UK oil, Brent Crude. The date is February 23rd, 2020. If you want to stay up to date with all of our UK oil charts and other currency pair analysis, make sure you click that red subscribe button on the bottom right hand corner of your screen. Okay, so sentiment on oil is bearish, still bearish. Possible retrace to $60 per barrel this week. We've got a little bit of short-term bullish action happening, but really nothing to get excited about. This is a multi-year downtrend. The last few weeks saw price really rejected from that $65 barrel point, which means it's probably not going back there. So if we look, let's go ahead and zoom in. This is our weekly chart, so each one of these candles represents a week of price action. Last week we made an attempt to push back up. It hit $60 a barrel, and then more selling ensued. So, I mean, it could creep up to 60 and test that line again, but that wouldn't last too long. So let's go ahead. See this other support and resistance zone right there? That's what it's combating. It tested that. If we were to put a Fibo on there, Fibonacci tool, it's probably like the 38.2 retracement mark or something. If you're not familiar with the Fib retracement tool, make sure you study that. You take a recent high to a recent low, and it'll tell you where price will bounce. Look at that. Indeed, price bounced up to the 38.2 Fibonacci retracement point, and then started moving away. So that could be all we see from retracement, or it'll hang out under the $60 barrel for the week before moving downwards. Let's go ahead and draw a parallel trend channel to our big prevailing downtrend. Okay, looks something like this. So we think about trends over time. They have parallels. And that gives us our short-term view of what's happening in the long term. So parallel channel here, we see, that price is now riding the bottom of this channel here. Even if there was some kind of geo event that sent price back up into the zone, my guess is enough selling would ensue that it would quickly reject price. Okay, so let's go back to our weekly. And it's not an exact angle, but you get the picture of what's happening in this downtrend. So just like we do in the uptrend, I want to apply that moving average. Moving average can tell you how long to kind of hold something, right? So you don't really want to use that as support and resistance, but it can tell you how intact the trend is. The downtrend, the uptrend. Okay, here we see price moving below the moving average. As soon as it starts moving really far away from it, it'll at some point want to scooch back. We see here in this big move down, price eventually scooched back, went all the way back up here before continuing down. So be careful, price does that a lot. Lots of waves in there. But this is a good sign. This is short-term bearish indicator moving below that weekly fast-moving average. Let's go ahead and look at our daily. Okay, price just moved above the daily fast-moving average. So like we were saying earlier, price could hang out around $60 a barrel, but eventually price will catch up here, and then price will start to move below it. When our candles close below the moving average, that's typically a good sell sign. A lot of automated trade bots are simply based on the logic of price moving above or below a certain moving average to initiate the buy and sell orders, which is fine, except if the market goes sideways, then you end up losing a lot of money. So anyways, UK oil, bearish, long-term. Next targets we can see. Let's think about this. Okay, so price bounced off that $52 a barrel mark, that support. If it moves through there, next stop $45 a barrel, and then all the way down to this 28 mark. But potentially could just waver around $60 and this $52 mark for the rest of the year, even as we see price kind of price channel there. So best of luck this week. I wish you much profit.